Well, good day to everybody. Welcome to the Fiscal Philosophy YouTube channel. Uber had a pretty dramatic little pullback on their earnings. And generally speaking, the question everybody's asking is this overdone? Or is this justified? My personal view with a quick surface look is that it's probably overdone. Uber has a lot of great things going for it. They've got somewhat of a moat, you might say. They have what tends to be pretty sticky revenue, and their quarter was by no means disastrous. So let's dig in a little bit and see how they did and guess as to maybe why the market is just punishing them a little bit. So first up, on the top line, I don't think anybody can really say anything else other than they definitely crushed this one. They put up a number that was above expectations, and compared to the comparable quarter prior year, up 20%. For a company Uber's size, a 20% year over year increase in revenue for this quarter is pretty substantial. Okay, I think that's very good. I wouldn't we'll say I wouldn't kick that one out of bed for eating crackers. But profitability was a slightly different story, not quite up to expectations, and I'd like to take a look at why that might be. So, one standout item I noticed was that SG&A spiked this quarter. Now, I looked at the gross margins first, and what I saw was that gross margins didn't go down at all. In fact, they went up like a few tenths of a percent. So definitely wasn't a cost of revenue issue on this, or a margin issue, at least not a gross margin issue. But SG&A did spike here. So I think that could definitely explain part of why maybe profitability disappointed investors a little bit this quarter. However, if some of this did result in growth in active monthly users, and those users do tend to be kind of sticky, you could argue that over time it would be worth it. It'll pay off eventually. So that's just a little thing to keep in mind there. So ironically, I was making this video yesterday when the stock was down on earnings, and I was going to basically ask the question, is this overhated? Are these results overdone? Should the sell-off have happened? And wouldn't you know, snaps right back up today. And I think that just goes to show that the market is really volatile, like I said I thought it would be in 2025. And companies are going to have for basically almost no reason, like these drastic sell-offs that happen, these knee-jerk reactions, and then afterwards rationality is going to come back into the situation and people will buy back in. And I think at the moment my strategy for 2025 is to be positioned to more or less take advantage of these bits of drama with the fluctuations in stock price. Now I can, for example, sell cash secured puts because the volatility will make those premiums pretty good. And of course, if I'm trying to add shares just in general, I can also buy some of these dips that are happening in quality companies and count on them to continue being quality companies into the future and eventually recover that price and basically accumulate at attractive share prices and basically get the gift of fear. The reason for this little blip and dip the other day, I think, comes down to profitability. EPS, to my understanding, was a disappointment. And if you look, even free cash flow was down a little sequentially. But I think it's important to take into account that they grew the top line in a substantial way. This is still a company that is working on growing its top line. And I believe if they can do that meaningfully, even if it means that the free cash flow is not absolutely as high as it could be, if those top line increases are sticky and don't go away, they will eventually translate into higher free cash flows, because we trust that something like Uber has a lot of efficiencies of scale, etc. They have their take rate. They can monetize that additional revenue. It just sometimes does cost a little bit more to get it through the door, which will reduce your free cash flow to an extent. However, they're still producing a substantial sum of free cash flow, while at the same time driving a still pretty impressive top line. And the multiple of this free cash flow, if you anticipate its future growth to be pretty impressive, is not terribly expensive either. So we're looking at under 20 times free cash flow for this business, while at the same time understanding that they can grow that free cash flow pretty rapidly over the next handful of years. Compare this to what the valuation of something like Costco is, which is not a hyperscaler. It's a retailer that can only grow so fast, and their growth costs a lot of money. Like a lot of money. They have to build out stores, etc. They can only do so much with same store sales in a given area. But then you have something like this, which trades for relatively cheap, and people are just, well, they're worried about competition as though retail isn't competitive. And what are the competitors to Uber? Lyft, which is a joke. Waymo, which still has a very long way to go. And by the way, you can order Waymos on Uber. So it's a collaboration, maybe a tense collaboration at this point. Also, and of course, the ever-present danger of the robo-taxi from Tesla. However, I think that is all overdone, and that this is overlooked and will probably seem obvious once the stock shoots up to like $100 or something, and then people are like, oh duh, why not Uber at 60 or even 70? That'll be what people are thinking at that time. I just think at the moment it's overhated, not overrated. I think it's quite good and will do quite well. Feel free to comment below with your thoughts on Uber and their competition. Also, be sure you catch me every Saturday, 8 p.m. Eastern. Cash Flow Kings live. Like and subscribe for the algorithm. My Discord also is linked in the description. We talk about stocks like Uber, MPW, Grab, Amazon, BTI, PayPal, Evolution Gaming, Disney, of course, Medical Properties Trust. That's a big one, and many more. We're always open to new people with new ideas, and keep that conversation around investing going. Take it easy, everyone.